Hey guys and girls, Nathan Birch here from the B.Invested headquarters today, talking about a beginner's guide on how to build a multiple property portfolio. So most people in the country get 1 or 2 properties. Getting 10 or 20 is very different, and it's important to map that out and plan it out as to how you'll actually reach that goal and how you'll be able to build a multiple property portfolio. So there's a few different elements to it. Firstly, work out what your goals are, work backwards from those goals as to what you need to be able to get to that goal. Break it down into further steps from a finance perspective. What does the finance look like? What do the assets look like that you need to acquire? And how to be able to build out that position. So I think probably half of it comes down to the finance. So once you've got a strategy and the strategy is set, and you go, okay, cool, I need to have 10 properties bringing me in $300 a week. That's $3,000 a week. $3,000 a week times 52 is $150,000 per year. We need to have those 10 properties. How do we go out and buy 10 properties? I can't save the deposit. Where's the money going to come from to service the loans and all that? So I reckon half of it comes down to, once we've got the plan set out, then half of it comes down to the finance structure, and the other half of it comes down to understanding what properties you need and going and purchasing those properties. And ultimately the property structure and the finance structure need to work hand in hand so you can continue that journey. So on the property front, if you need 10 properties, you need to work it down to, okay, what would each deposit look like? So if we need a 50 grand deposit, then, or 30 grand deposit, okay, we've got the 30 grand, what do we do now? The other half of it is getting the finance. So what is the bank requiring from you? How will the bank allow you to borrow for 10 properties? Do you need cash flow based properties that are going to increase your cash flow? Do you need an equity rich property which is going to enable you to go back very quickly, pull out that equity and use that again to purchase subsequent properties? So it's important to have someone that understands the finance and can detail a finance strategy for you. I see a lot of people that go out and just willy-nilly buy a property and go, okay, I've bought 2 properties, what do I do next? And it's, well, you know, the properties that you've bought have screwed up your finance, so you can't go on and buy property number 3 and property number 4. For most people, when I work with them, just detailing out a strategy and doing a map session with them, where they get stuck is buying the wrong assets and getting themselves jammed up. So make sure that you've got, you know, from number 1 and 2, that's not what you need to worry about for today. You need to worry about number 3 and 4, and number 5 and 6, and number 7 and 8, and how the first couple of properties are going to help you get the second and third batch of the properties in your portfolio, if that makes sense. So you want to be looking at the finance strategy, very, very crucial. The property element of it is very crucial as well, because you want to be making sure that you're buying the properties below market value, they've got a strong cash flow, and they've got an upside for capital growth. So each person's position is very different. Some people do need more cash flow rich properties, some people do need more equity rich properties, but make sure that you've got the finance strategy in place. If you need help on building a finance strategy, speak to my team. My head of my team here has been my personal broker for the last 15 years, done about 80% of the loans in my own personal property portfolio. So, you know, that can start off with, you know, mapping out, okay, this is what you can borrow. So generally when you go to a bank or to a broker, they'll say that, you know, you might be able to borrow, you know, $500,000. A lot of people think, okay, let's go spend that $500,000 and buy a property. But should you be spending that 500 grand and buying 1 property? Should you be spending that 500 grand and buying 2 or 3 properties for your portfolio? And how will those properties help out your position? And that's where the tricky parts come in, and that's where the team here at B.Invested can help you work out that strategy of what properties to get. If you place it right and you do the right structure, the bank may say you can borrow 500 grand a day. You break it down and buy 2 or 3 properties, you go back to the bank and they might say, well, look, you can borrow another $300,000 even though you've exhausted that 500 grand. Unfortunately for most, people just look at, okay, I can borrow 500 grand, let's go buy a 500 grand property. The property is a vehicle on the drawing board, it's not the destination. And we need to be very clear on understanding the property is only a vehicle to get us from where we are to where we want to be, and the destination is where you're trying to head to. So look at it as such. Where does the deposit come from? So if you've got 30 grand saved up and you can buy one property, how do you get that 30 grand to go into another property? You can save up. That might take you 6 months, 12 months, 2 years to save up another 20, 30, 40, 50 grand for a property, or you could buy an equity rich property that you can go back to, rip out the equity and use that equity to buy a second property. So for example, this year in 2020, we're almost at the end of the year, we've seen more people this year being able to build large property portfolios due to the fact that they've been buying them below market value and being able to pull out that equity. So we just did a deal in Sydney City, which was 400 grand that revalued for 585 grand, 185 grand worth of equity in the property. Within a month, the investors went back, pulled out 80% of that, got about 140 grand, 130 grand in their bank account, and used that to buy more investment properties. There's been people that we've seen with sort of 20 grand that have gone out and bought a property for $80,000 to $100,000, and then go back within a month or 2 months time, pull out that equity and use that for the second deposit. So you need to be questioning yourself on your journey. What do I need today? Do I need equity? Do I need cash flow? What does the bank require from me? All too often, I think about my own personal journey and my own property portfolio, and it's only when I'm on a map session or talking to someone, they're like, what do you think in this situation? I think back to myself and my own personal portfolio, and think, half of the properties in my portfolio I bought because I wanted to buy them, but the other half of them weren't for me. It was for the bank to lend me more money. So purely the properties had to fit the bank's criteria, so then the bank would allow me to come back and get a subsequent loan so I could buy those properties that I wanted to. So look at the property purely as a vehicle to get us from where we are to where we want to be. If you need help on building out that strategy, you can reach out to us.